So, Finance Act 2023 has made a huge amendment. It has brought in a new provision, a very interesting provision with respect to proceeds from life insurance policy. Proceeds from life insurance policy. I will first discuss with you the existing provision, the provision which was existing before the Finance Act 2023's new insertion. You'll be thorough with that, and then we will go to the Finance Act 2023 new insertion. Because whatever was already existing before the amendment, even that is as it is applicable even now. Finance Act 2023 did not amend existing rules. Instead, it just brought in a new rule. Are you understanding? Yes. So, what is this new rule? What is the existing rule? How will it impact? Let us discuss this in full detail. Listen to me. We're discussing about the original provision, the already existing provision first. And please keep in mind, in this entire discussion, I am not talking about something called as key man insurance policy. I am not talking about unit linked insurance policy, and I'm also not talking about term life insurance policy. I am talking about any insurance policy which is not one of those three. I'll repeat again. What are we not covering? We are not talking about key man insurance policy. Key man insurance policy. We are not talking about unit linked insurance policy, and we are also not talking about term life insurance policy. We are talking only about all other life insurance policies. Keyman insurance policy is a policy wherein, like for example, let us say Reliance Industries Limited is the assessee. For Reliance Industries Limited, who is the key man? Who is the main person for them? Mr. Mukesh Ambani. Now, if something happens to Mr. Mukesh Ambani, let us say, then don't you think Reliance is going to get negatively affected? At least for some time. See, no doubt, separate legal entity and all of that. But come on, Mr. Mukesh Ambani is the face of Reliance Industries Limited. So if something happens to him, then clearly Reliance is going to be affected. So Reliance is taking a life insurance policy in the name of Mr. Mukesh Ambani. Alright, life insurance policy ensuring whose life? Ensuring Mr. Mukesh Ambani's life. Now, on this life insurance policy, who is going to pay premium, guys? Reliance Industries Limited is going to pay premium. Now, for them, if you see, this premium is going to be a business expense because they took this policy for their business interest, because their business will get affected if something happens to Mr. Mukesh Ambani. So, if something happens to Mr. Mukesh Ambani, the life insurance company will give money to whom, will give compensation to whom? They will give compensation to Reliance Industries Limited. This is key man insurance policy. So in key man insurance policy, what happens is my assessee is, let us say, Reliance Industries Limited. My assessee is, let us say, a company. And this company has taken a life insurance policy. This company has taken the life insurance policy ensuring the life of its key man. Now, against this life insurance policy, the company is going to keep paying premiums. Every year, the company is going to keep paying premiums. So these premiums for Reliance Industries Limited, these premiums are going to be considered as business expenses. They can debit it to their P&L account. It is allowed. It is an allowed expense. It is clearly a business expense because this policy they have taken from their business interest point of view. Now, when life insurance company gives any compensation to Reliance, let us say upon Mr. Mukesh Ambani's death, when life insurance company gives any compensation to Reliance, this compensation is going to be fully taxable for Reliance. It will be considered as a business income for Reliance and it will be taxed for Reliance. Did you understand till here? Can I complicate this a little bit? Yes. So whatever business expense, whatever premium you're paying on this policy, that premium will be considered as a business expense for Reliance and it will be allowed. And whatever compensation Reliance gets from this company later, that compensation will be taxed for Reliance. It's going to be a business income for Reliance. And this is about my key man insurance policy discussion. Now coming to unit linked insurance policy, this we will not discuss about right now. This has a connection with capital gains. However, this is a CA final concept. They've removed it from our syllabus, so we will not discuss about this right now. Now, what is a term life insurance policy? See, term life insurance policy is a kind of an insurance policy where during the term of the insurance policy, basically insurance policy will have a term, okay? In that term, in that period, if the insured dies, only then insurance company will give compensation. In that term, if the assessee does not die, if the insured does not die, then there will be no insurance compensation. Like for example, let's say there is this person, Mr. Blue, he's taken a term life insurance policy, and this life insurance policy is, let us say, for 50 years. Okay, now this is going to be the term of the life insurance policy. In this 50 years, if he dies, then his family will get compensation. But in this 50 years, if he does not die, then there will be no compensation, nothing, no money from insurance company, you will not receive anything. This is term life insurance policy. During the term of the policy, if the insured dies, then the insurance company will give compensation. If the insured does not die during the term of the life insurance policy, then there will be no compensation from the insurance company. This is term life insurance policy. So the discussion that we are going to be having this point onwards is not applicable to these three. It's not applicable to key man insurance policy. What is key man insurance policy? The assessee is taking a life insurance policy on the life of the key person of that entity. In unit linked insurance policy, we've skipped this. Term life insurance policy, we said that this life insurance policy has a certain term life. It has a certain term period. In that term period, if the insured dies, only then the insurance company will give compensation. During the term, if the insured does not die, then there's going to be no compensation. So this discussion is going to be point number 1, not applicable to these three. This is clear. So we are talking only about other life insurance policies. We're talking only about other life insurance policies which are not E-man insurance policies, which are not unit-linked insurance policies, and which are not term life insurance policies. All right, point number 1. Now listen to the second point. Point number 2. From life insurance policy, any proceeds which you receive from life insurance policy, any money which you receive from life insurance policy, this money is generally exempt under section 1010D. Under 1010D, it is generally exempt. But guys, I'm not talking about keyman insurance policy. I'm not talking about ULIP. I'm not talking about term life insurance policy. Other life insurance policies, if you see, whatever money you get from the life insurance policy, whatever are your proceeds from the life insurance policy, it is generally exempt under section 1010D. It is generally exempt. This section number you should know. However, there are some cases where we may lose this exemption. All right. Like for example, we have to see the date of the policy. There are various situations. We have to see the date of the policy. If the date of the policy is before 1st April 2003, if you took the policy before 1st April 2003, then there is no condition. In that case, whatever proceeds you get, that proceeds will always be exempt only, no conditions, no doubt at all over here. But however, if you had taken the policy on or after 1st April 2003, but you had taken the policy before 1st April 2012, let us say, then in that case, we'll have to see how much premium are you paying. See, from life insurance policy, you're getting proceeds. But even you would have paid premium to life insurance policy every year, yes or no? Every year, even you would have paid premium for the life insurance policy. So I will see how much premium are you paying. What is your premium per annum? If premium is more than 20% of the sum insured, every life insurance policy will have a sum insured. Every life insurance policy will have a value. That's called a sum insured. So if the premium is more than 20% of sum insured, if even in 1 year, if even in 1 year the premium is more than 20% of sum assured, then you will lose the 1010D exemption. You will lose the 1010D exemption, which means from such a policy, if you get any proceeds later from such a policy, that proceed is going to be taxable. Are you listening? Are you understanding? Yes, guys, are you focusing? Yes, I'll repeat again. From life insurance policy, whatever proceeds you get, those proceeds are generally exempt under 1010D. But please keep in mind, I am not talking about keyman insurance policy. I am not talking about unit linked insurance policy. I am not talking about term life insurance policy. I am talking about other life insurance policies. Other life insurance policies, whatever proceeds you get from them, that proceeds are going to be fully exempt under 1010D. But however, there are some conditions. If the policy was taken before 1st April 2003, then there is no condition. If the policy was taken on or after 1st April 2003, but if it was taken before 1st April 2012, then in that case, I'll see how much premium are you paying for this life insurance policy. You've taken a life insurance policy. So, of course, every year you will be paying premium, right? So, how much premium have you paid? In any year, did the premium exceed 20% of the sum insured? If it exceeded 20%, even in 1 year, let us say, then in that case, your 1010D exemption gone. Later, whenever you get the proceeds, that proceeds will be taxable. How much will be taxable, we will see later. Okay, how much will be taxable, we will see later. But whatever premium you are paying, if this premium is more than 20% of the sum insured, if the premium is more than 20% of the sum insured, even in 1 year, if it is more than 20% of sum insured, you will lose the 1010D exemption. Later, whatever proceeds you get, those proceeds will be taxable. Then, if you have taken the policy on or after 1st April 2012, if you've taken the policy on or after 1st April 2012, I'll again see how much premium are you paying. I will check now. Here the 20% number will be reduced to 10%. I'll see even in 1 year has the premium been more, is the premium more than 10% of the sum assured? Even in 1 year, is it more than 10% of the sum assured? Not sum insured, it should be sum assured. Even in 1 year, is the premium more than 10% of the sum assured? If yes, the 1010D exemption you will lose. And what will happen if you lose the 1010D exemption? Later, whatever proceeds you get, this proceeds will be what? This proceeds will be taxable. Are you understanding? This is my third situation. So you will look at the date of the policy. If the date of the policy is before 1st April 2003, then the whatever money you get from this policy is going to be fully exempt. If the policy was taken on or after 1st April 2003, but before 1st April 2012, even if 1 year the premium is more than 20% of sum assured, then you lose the 1010D exemption. Later, whenever you get the proceeds will be taxable. Similarly, if the policy was taken on or after 1st April 2012, you will see how much premium have you paid. If even 1 year premium is more than 10% of sum assured, then the 1010D exemption you will lose and the proceeds will be taxable. Alright, then listen to the next situation. If you have taken the policy on or after 1st April 2013, let us say, you've taken the policy on or after 1st April 2013, now who is the insured? In whose life, on whose name have you taken the policy? Who is the insured? If this insured happens to be a disabled person, a disabled person under section 80U, 80U is a section which talks about disability, or if this person happens to be not disabled, let us say, but he is suffering from a disease which is covered in section 80DDB. So the person in whose name I've taken the policy, the person who's insured, if he happens to be a disabled person or if he happens to be suffering from a disease, then in that case, the limits will slightly increase. In that case, I will see the premium. Is the premium more than 15% of sum assured? If the premium is more than 15% of sum assured even in 1 year, then you lose the 1010D exemption, and whatever proceeds you get from this policy, that proceeds will be taxable. Alright, now this whatever I've discussed with you till here, this is the old provision. Alright, now can we ensure that we're thorough till here? I'm going to ask you some quick questions. You will answer the questions quickly. Now, all of these dates, if you see, you will have to remember these dates. I know it's a burden, but you'll have to remember these dates. The thing is, on these dates, the amendments came accordingly. You're understanding all of these dates that you have, it's all because of the amendments that came in. So this entire concept has undergone an amendment various times. Earlier we had the 20% limit, then that limit was changed to 10%, then that limit was again enhanced to 15% only for these people. So we have to remember these dates, no choice, but slowly we'll get used to them. Now listen, tell me, let's try to learn this up. Everybody tell me. Policies taken before 1st April 2003. Will you bother about anything at all? No. Policies taken before 1st April 2003. Whatever money you get from this life insurance policy, you will straight away say that the money is fully exempt. Do you agree? Yes, if the policy is taken before 1st April 2003, it doesn't matter to you how much premium you're paying, how much proceeds you're getting, doesn't matter. The entire amount is going to be fully exempt for you. But if the policy is taken, let's say, after 1st April 2003, but before 1st April 2012, if the policy is before 1st April 2012, how much maximum premium you can pay? How much maximum premium you can pay? Maximum only 20% of sum assured you can pay. What if you pay more than 20%? Then what will happen? If you pay more than 20%, you will lose your exemption. And if you lose your exemption, then what will happen? If you lose your exemption, then later whatever money you get, that money is going to be taxable. See, participate along with me, keep repeating along with me so that this thing gets registered in your memory. Otherwise, you will not be able to focus. You will lose your focus in very short span of time. So keep participating, keep repeating because you cannot compromise over here. Okay, so if the policy is taken before 1st April 2003, it's going to be fully exempt. If the policy is taken on or after 1st April 2003 but before 1st April 2012, how much maximum premium you're allowed to pay? 20%. But what if you paid more than 20%? Then later, whatever proceeds you get, no exemption, taxable. If the policy is taken on or after 1st April 2012, okay, if the policy is taken on or after 1st April 2012, then what's the number in your mind? The number in your mind is 10%. If the premium is within 10% of sum assured, then later you got the money, that money is fully exempt. But if the premium is more than 10% of sum assured, even one day, even 1 year, if it's more than 10% of sum assured, then later whatever money you get from this policy, that money is going to be fully taxable. You've lost the 1010D exemption. And finally, if you've taken the policy in the name of a person who is disabled or who's suffering from a disease, if you've taken the policy in the name of a person who is disabled or is suffering from a disease, if your insured happens to be a disabled person or a person suffering from a disease, then the number will enhance to 15%. You will see, is the premium more than 15% any year? Even 1 year, if the premium is more than 15%, what will you do? If even 1 year the premium is more than 15%, then later whenever you get proceeds from this policy, you've lost the exemption. It's going to be taxable. Are you understanding? Till here, are you clear? Yes, see, I'll give you one small tip from the exam point of view. Exam point of view, 1st April 2003, even if you don't remember, it is fine because your policy will definitely be either before 1st April 2012 but after this date, or it will be after 1st April 2012. So this part, even if you want to, ignore, it will be fine. If you ignore this date, you will have to remember only one date, which is 1st April 2012. And for disabled people, you have one more date, 1st April 2013, just 1 year later. That's all. Understanding, everybody? So this is a very, very important discussion. But have I discussed with you anything which is a new insertion as of now? No. Whatever I've discussed with you as of now is only the existing provision. We haven't reached the amendment yet. This is only the existing provision. So let's do a revision till here once again from the beginning of this concept. Come on, sit up straight. Again and again, I'll keep giving you a revision so that at any point of time, we are confident about the concept still here. All right. See, listen. Point number 1, this entire discussion is not applicable to key man insurance policy. It is not applicable to unit-linked insurance policy. It is not applicable to term life insurance policy. It is applicable only to other policies. All right. Now, what is the concept over here? The concept over here is about the proceeds that I'm getting from the life insurance policy. Whatever proceeds I get from life insurance policy, those proceeds are generally exempt under 1010D. Those policies are generally exempt under 1010D. But however, if you want to enjoy this exemption, you have to fulfill some criteria. If you want to enjoy the exemption, then your premium, the premium that you're paying, that premium has to be within a certain limit. The premium has to be within 20%, within 15%, the premium has to be within 10%. Only then the proceeds will be exempt. All right, the dates are on your screen. I'll give you a minute. Just run through this entire table once on your own self-study first, and then I'll take you forward. Just go through this chart one last time. Try to register as much as possible in your memory right away. Are you done? Have you gone through this entire thing once? Yes. So if the policy is taken before 1st April 2003, no conditions. If the policy is taken on or after 1st April 2003, but before 1st April 2012, the number in your mind is 20%. If the policy is taken on or after 1st April 2012, the number in your mind is 10%. But however, if the policy is taken on or after 1st April 2013 on the life of a person who is disabled or suffering from a disease, then 15% is a number in your mind. Now listen, look at this diagram over here. Do you agree? Any life insurance policy for that matter, there will be two transactions, guys. The first transaction is assessee will pay premium every year. And then upon the maturity of the policy, the life insurance company is going to give us proceeds. Okay. Please know that our objective right now is not to learn insurance. We're not learning insurance. We're learning the impact of income tax on insurance policies. So we are not focusing on insurance as a subject. We are focusing on the impact of income tax on the insurance adjustment. All right. So any insurance policy, if you see, there will be two basic transactions. Every year, the assessee will pay premium and the life insurance company will, upon maturity, give proceeds to the assessee. Now tell me, whatever I've discussed with you over here, is this discussion about premium or is this discussion about proceeds? My discussion with you was about what? My discussion with you is about the proceeds. My assessee is getting these proceeds. Now, are these proceeds exempt or are these proceeds taxable? That is what we're trying to understand. When will if these proceeds are exempt, they will be exempt under which section? They will be exempt under 1010D. When will these proceeds be exempt? Everybody tell me. When will these proceeds be exempt? These proceeds will be exempt only if the premium is within 10%, 15%, 20%. So do you agree now that whether the proceeds are exempt or not, that depends upon only one factor, it depends upon the premium? So our focus is on proceeds. We are learning about the proceeds. The proceeds, this is going to be an income for the assessee. No, there's an inflow. This is going to be an income for the assessee. Now, are these proceeds exempt or taxable for the assessee? These proceeds are generally exempt under 1010D, but they may also be taxable. When are they exempt under 1010D? If the premium is within the 10% number, the 20% number, or the 15% number, then it's going to be exempt under 1010D. What will be exempt? The proceeds. But however, if the premium even 1 year is more than 10% number or 20% number or 15% number, then the proceeds will be taxable. Alright guys, so this was my entire discussion about the proceeds. Till here you've understood. Now, just for a moment, I am shifting my focus to the premium part. Okay, my entire discussion is actually about proceeds only, but just for a minute I'm shifting my focus to the premium part. I'll come back to the proceeds. Now, do you agree that the premium which my assessee is paying over here, this premium is an expense for the assessee? This premium is an outflow for the assessee. This premium is a payment for the assessee. He's making a payment of the premium. Now, this premium which he is paying, this premium that he is paying, he will get a deduction under ATC. Section ATC will go to chapter 6A, guys. So, under chapter 6A, section ATC, this premium that the assessee is paying, he will get a deduction over there. Okay. Now, ATC goes to which section? Do you remember? We've discussed this. ATC goes to ATCCE, and ATCCE is the section which goes to chapter 6A. And ATCCE limit, do you remember? ATCCE limit, do you remember? How much maximum deduction can you get under ATCCE? ATCCE, you can get maximum 1,50,000 deduction you can get. And ATCCE has totally how many components? ATCCE has totally 3 components. ATC, ATCCC plus ATCCD1. You remember? Now listen, the assessee is paying premium. The premium will go to, the premium amount that the assessee has paid, that premium will go to ATC. ATC will go to ATCC. All that is fine. Now under ATC, how much deduction is the assessee going to get? The numbers are the same. If the policy was taken, we'll again see the same thing. The numbers are exactly the same, guys. We'll again see the date of the policy. If the date of the policy is before 1st April 2003, tell me, is there any condition? No. Which means the whole premium as it is, whatever premium you are paying, you'll consider the whole premium under ATC. But later under ATCCE, you will limit it to what? Under ATCCE, you will limit it to 1,50,000. So are you understanding? 1,50,000 is not specially a limit on just the premium. You're understanding? 1,50,000 limit is not just for premium. 1,50,000 limit is for full ATCCE put together. Right now, I am talking only about premium. So for premium alone, independently, what is the limit I'm talking about? If the policy is taken before 1st April 2003, no limit. If the policy is taken on or after 1st April 2003, you tell me what will the next date be. But before what will be the next date? The next date will be 1st April 2012. So if the policy is taken within this date, then tell me how much premium will you allow under ATC? I am talking right now about the premium number. How much premium will you allow? Only 20% of the sum assured you will allow under ATC. But later when you go to ATCCE, you will anyways limit it to how much? You will anyways limit it to 1,50,000. But first, how much will you consider? 20% of sum assured. If the policy is taken on or after 1st April 2012, then you tell me the number. Maximum, how much premium you will allow under ATC? Maximum you will allow only 10% of sum assured you will allow. Finally, tell me, if the policy is taken on or after 1st April 2013 on the life of a person who happens to be either disabled under section 80U or is suffering from a disease under section 80DDB, then how much premium you will allow under ATC? Only 15% of sum assured you will allow under ATC. This is what you will allow under ATC. Total of ATC you will find. Then total of ATC you will take to ATCCE, and ATCCE you will again restrict it to how much? You will again restrict it to 1,50,000. All right, you answer my question. I'll give you one example. Let us say the sum assured happened to be 50 lakhs. Okay, and let us say the policy was taken on 1st of April 2020. The policy was taken, and the premium that I am paying is rupees 6 lakhs per annum premium I am paying. Okay, and upon maturity, let us say the maturity of this policy happened in this year on 1st April 2023. The policy happened, let us say, and upon maturity, let's say I got 40 lakhs from this insurance company I got. Now answer my question. Totally how many transactions are there? Totally how many transactions are there? There are two transactions, guys. What's the first transaction? Every year I'm paying premium. And what's the second transaction? Second transaction, I'm getting proceeds from the life insurance policy. Now every year, how much premium I'm paying? Every year 6 lakhs premium I'm paying. The premium that I'm paying will go to which section? The premium I'm paying, I will take it to section ATC. Okay, but under ATC, tell me how much I will get. How much reduction you will allow under ATC? You will see the date of the policy. The date of the policy is 1st April 2020, guys. The date of the policy is after which date? The date of the policy is on or after 1st April. Come on, tell me the date, everybody. The date of the policy is on or after which date? The date of the policy is on or after 1st April 2012. Therefore, maximum how much premium you will allow? Maximum only 10% of sum assured you will allow. What is a sum assured? 50 lakhs. What is 10% of 50 lakhs? Only 5 lakhs you will allow. How much I paid? I paid 6 lakhs. So out of 6 lakhs, how much will you allow under ATC? Under ATC, you will allow 5 lakh only. Then you will do ATCCE calculation, guys. ATCCE, you will say ATC plus ATCCC plus ATCCD1. You will do this calculation. You will say that plus ATCCD subsection 1 should be within how much? Should be within 1,50,000, you will say. So ATC is 5 lakh, ATCCC 0, ATCCD 1 0. Total happens to be 5 lakh, more than 1,50,000. So you will restrict this to how much? You will restrict this to 1,50,000. Are you understanding? I'm trying to give you a 360-degree picture of this whole thing. I don't want to discuss with you about just the proceeds. I want to connect it with ATC also so that both will get covered in this entire discussion. I will restrict it to 1,50,000. Till here, did you understand? Yes, two transactions, premium and proceeds. Whatever premium I am paying, that premium will go to ATC. But ATC, will I get full 6 lakh as deduction? No. It depends upon the date of the policy. The policy is on or after 1st April 2012. So maximum only 10% of sum assured only I can get as a deduction. So only 50 lakh into 10%, only 5 lakh I will get under ATC. But ATC will go to ATCCE, and ATCCE will anyways restrict it to 1,50,000. Okay, now answer about proceeds. Proceeds, if at all it is exempt, it will be exempt under which section? Tell me the section number. If at all the proceeds are exempt, the proceeds will be exempt under which section? The proceeds will be exempt under section 1010D. Now tell me, can I take 1010D exemption over here? Will I be able to enjoy 1010D exemption over here? Sorry, SSC, no 1010D exemption. Why no 1010D exemption? Because if you see, the policy is taken on or after 1st April 2012, and 1 year at least, minimum 1 year at least, the premium is more than 10% of sum assured. So as the premium is more than 10% of sum assured, therefore no exemption. This is the checkpoint of the entire discussion we've had till here. If you're comfortable with this discussion, then very, very confidently, I will take you to the next part of the discussion. This example was like a checkpoint of whatever we've learned till here. Till here, fine. Give me a quick confirmation, please. If you have any doubts, get them clarified, please. Till here, you should be confident. Only then I can even think of taking you any forward. Till here, okay? So premium and proceeds, there are two transactions. All right. Premium will go to ATC and proceeds will go to 1010D. Alright, premium will go to ATC and the proceeds will go to 1010D. Proceeds, are they going to be exempt or not? Depends upon premium. Alright. If I say that no 1010D exemption, so how much money you received upon maturity? This 40 lakh which you received upon maturity, I can't say that this 40 lakh is going to be fully taxable. There will be a computation which we will see later. But what you should know right now is 1010D exemption will not apply. 1010D exemption will not apply because your premium was more than 10% of sum assured. So no 1010D exemption. 40 lakhs money you have received. A part of that 40 lakh will be taxable. What's going to be taxable we will see later. Alright everybody. Now listen to my next set of discussions. Till here you have understood really well. Whatever I discussed with you was the already existing provision only. Now I am taking you to the new provision. What does a new provision say? The new provision brings one more date. The new provision was brought in by Finance Act 2023. So obviously what will the date be, guys? Obviously the provision will be on or after 1st of April of which year? It was brought in by Finance Act 2023. So obviously the provision will be on or after 1st April 2023, logical, right? So if the policy was taken on or after 1st April 2023, then the above points should not only be fulfilled. Basically, your premium should be within the 10% number, the premium should be within 15% number. All that provision is anyways there. The premium should anyways be within the 10% number, the 15% number, the 20% number, whatever is applicable, that point is anyways there. In addition to that, they have now inserted one more condition, and that one more condition is that premium each year should be within 5 lakhs. So not only do we have a percentage criteria now, we also have an amount criteria. But tell me, when will this whole thing apply? This whole thing will apply only if your policy was taken on or after 1st April 2023. So today, if I'm going to go and buy a policy, then on that policy, this provision will apply. But today, if I have a policy which was taken much earlier, before 1st April 2023, then will you apply this? No. When will you apply this? You will apply this only if you took the policy on or after 1st April 2023. So if you've taken the policy on or after 1st April 2023, if the date of policy is on or after 1st April 2023, then not only your premium should be within 10, 15, 20 as the case may be, even the amount, if you see, the premium has to be within 5 lakhs. If both the conditions are fulfilled, then whatever proceeds you get, that proceeds will be 1010D exempt. Okay. If, however, the conditions are not fulfilled, then the proceeds will be taxable. How to calculate taxable amount later? I'm not taking that up now. So what we're saying now is that if the premium is within the 10, 15, 20 number and also the premium is within 5 lakh number, then the proceeds will be 1010D exempt. But let's say the premium is more than 10, 15, 20. You answer my question. If the premium is more than 10, 15, 20, will you even waste your time looking at this condition? No. You will straight away say taxable. If the premium is more than 5 lakhs, will you even look at this number? No. You will straight away say taxable. So when will it be exempt? It will be exempt if premium is within 10, 15, 20 and also the premium has to be within 5 lakhs. If both these criteria are fulfilled, then whatever proceeds you get from that policy later will be 1010D exempt. Alright, just one extra point. Does this new provision by any way impact ATC? No. ATC discussion, that's all, story over. With ATC, nothing more to discuss. ATC, no change. ATC, we've already spoken about. ATC story is over. The new amendment is only with respect to what? The new amendment is only with respect to proceeds. Okay, so if your policy was taken on or after 1st April 2023, later if you get proceeds from this policy, that proceeds will be exempt under 1010D only if your premium is within 10, 15, 20 and also your premium should be within 5 lakhs. Alright, if that is the case, I'll be smarter. I will go and buy 5 to 7 insurance policies. Each insurance policy, I will keep the value within 5 lakhs. And I will end up saying exemption, exemption for all. Possible? That is why they said if assessee has taken multiple policies here, you will do the checking for all the policies put together. If the assessee has taken multiple policies, then you can still claim. See, if the premium put together, I'll give you an example. Let us say my assessee has taken 3 life insurance policies. Okay, he has taken 3 life insurance policies. Let's call them as policy 1, policy 2, and policy 3. Okay, now I need a little bit more space. I'll put it over here. Assessee has taken 3 life insurance policies, policy 1, policy 2, and policy 3. Alright, now let us say for all the 3 policies are taken on or after 1st April 2023, and let us say all the 3 policies premium is within 10, 15, 20 as the case may be. So for policy 1, we are paying 2 lakh premium we are paying. For policy 2, 2,50,000 premium we are paying. For policy 3, 3 lakh premium we are paying. So do you agree that put together the premium is more than 5 lakhs? So because put together the premium is more than 5 lakhs, this condition is violated. So what you will do is any permutation combination. Let us say proceeds. How much proceeds are you getting from this policy? From proceed 1, you're getting 50 lakh. From proceed 2, you're getting 60. From policy 2, you're getting 60 lakhs. From policy 3, you're getting 70 lakhs. Okay. I'm telling you that you can still claim up to 5 lakh. You can still claim exemption. So which permutation or combination will you claim exemption? Which permutation or combination you will claim exemption? See, if you notice, policy 1 and policy 3 put together, if you see, how much proceeds are you getting totally? Totally 120 lakh proceeds you're getting. Alright, and total put together, how much premium you're paying? Total put together 5 lakhs premium you're paying. So total put together, if you see, it is within 5 lakhs. So if it is within 5 lakhs, policy 1 and 3, you can say, I will claim exemption. Policy 2, you pay tax on policy 2. This part you'll understand better when I'll show you the provision. See, I'll show you the provision, okay? Read the provision along with me. Look at this part in brackets, alright? You will understand. Everybody, patiently, slowly read this with me. If assessee has paid premium for multiple life insurance policies, and aggregate premium is more than 5 lakhs, exemption can be availed for those policies for which aggregate premium is within 5 lakhs. So if the aggregate premium is more than 5 lakhs, you can claim exemption for those policies with aggregate premium within 5 lakhs. Read this once again. If the aggregate premium is more than 5 lakhs, exemption can be availed for those policies for which the aggregate premium is within 5 lakhs. So if I apply this over here, if I apply the same thing over here, point number 1, do you agree aggregate premium is more than 5 lakhs? Yes, the aggregate premium is more than 5 lakhs. So I can claim exemption for those policies where the aggregate premium is within 5 lakhs. Tell me, policy 1 and policy 2 aggregate premium is within 5 lakhs? Yes. So if I claim exemption for policy 1 and 2, how much exemption I will claim, guys? How much exemption I will be able to claim? 110 lakhs exemption I will be able to claim. Then tell me, if I take policy 2 and 3, policy 2 and 3, if you see, is the aggregate premium within 5 lakhs? No. Here the aggregate premium is more than 5 lakhs. So this combination I cannot take. But if I take policy 1 and 3, 1 and 3, if you see, is aggregate premium within 5 lakhs? Yes, aggregate premium is within 5 lakhs. If I choose this combination of policy 1 and 3, how much exemption I will end up enjoying? 120 lakh exemption I will end up enjoying. So obviously tell me which combination will be better for the assessee. Obviously combination 1 and 3 will be better for the assessee. So I'll tell the assessee, listen, 1 and 3 you claim 1010D exemption. Policy 2 you pay tax on the maturity proceeds. This is going to take you some time to grasp. On this point only, multiple examples we are going to be taking up one by one, and that's what's going to help us understand. But for now, I will leave this open on your screen. I will let you do your own analysis. I will let you identify that where are you feeling stuck. And then once you identify the gap, then I will re-explain this to you. So do not worry. First, I'll give you 2 to 3 minutes. This entire new provision, you go through it once first. Have you seen it once? Can I give you a re-explanation of this whole thing? Yes. So when does a new provision apply? The new provision applies only if the policy is taken on or after 1st April 2023. So if the policy is taken on or after 1st April 2023, and later if you get proceeds from this policy, that proceeds will be exempt only if you fulfill two conditions, right? If policy is taken on or after 1st April 2023, from that policy, if you get proceeds later, that proceeds will be exempt under 1010D only if your premium is within the 10, 15, 20 number, and also the premium has to be within 5 lakhs. Okay, the premium has to be within 5 lakhs. So here we said, what if my assessee has multiple policies? If the assessee has multiple policies and aggregate put together, see, what if the aggregate put together premium was less than 5 lakhs? Then what would you say, guys? If aggregate the premium was within 5 lakhs, you would say fully exempt, right? You would say all the proceeds exempt, 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 you would have said. But here, if you see aggregate is more than 5 lakhs. So if the aggregate premium happens to be more than 5 lakhs, then what will you do? If the aggregate premium happens to be more than 5 lakhs, you will see that combination of policies where the premium is within 5 lakhs. Now see, what is the combination of policies where the premium is within 5 lakhs? If you see policy combination 1 and 2, it is within 5 lakhs. If you see 2 and 3, this is more than 5 lakhs. If you see 1 and 3, this is within 5 lakhs. So if the combination is within 5 lakhs, that combination you will take, and those combinations will be exempt. So either if you take 1 and 2 combination, then 110 lakh will be exempt and 70 lakh will be taxable. But if you take 1 and 3 combination, then 120 lakh will be exempt and only the balance 60 lakh will be taxable. So clearly this is a better combination than the first one. So we will suggest to our assessee, policy 1 and 3 you claim exemption and policy 2 you pay tax. Got it? Yes. Yes, guys. And now talking about one common point. Common point, when I say common point, that common point will apply to all these cases. Okay, the common point will apply to all of these cases, whether the policy is taken before 1st April 2003, after 1st April 2012, after 2023, doesn't matter. One common point you have for all of these policies, the common point is if the proceeds are received upon death. If the insurance company is giving you the proceeds upon death, then the proceeds are going to be fully exempt. There, you will not bother about 10, 20 number. The 10 number, 20 number, 15 number, 5 lakh number, everything dustbin. I will not bother about anything. If the proceeds are received upon death, then it will be fully exempt straight away. That's all. Alright, if the proceeds are received upon death, then you don't even have to look at 10, 15, 20 number. It will straight away be exempt. Now, keeping this entire thing in mind, shall we make a set of rules for ourselves? So that when I start showing you examples now, I'm going to be showing you around 10 examples. Okay, before I show you those examples, let's make a set of rules for ourselves and we'll apply those rules in each and every example and we'll get the confidence. That's how. All right, look at this. First rule. The first rule for us, if it is scheme and insurance policy, if it is ULIP or if it is term life insurance policy, will I even think about this whole discussion? No. I will think about this whole discussion only if it is any other policy. So this is going to be your first checkpoint. Your second checkpoint. If the amount is received upon death, if the proceeds are received upon death, will you check anything else? No. You will straight away say it is exempt. So when will you do this entire drama? Only if the proceeds are received not upon death. Only in other cases, only if it is not upon death, only then you will see whatever I'm going to tell you now. So point number 1, it should be other policy. Point number 2, the proceeds should not be upon death. And guys, one more thing, tell me, am I discussing with you about proceeds or am I discussing with you about premium? I am discussing with you only about proceeds. My premium discussion is over. Premium discussion is ATC, this is over. How much premium you will get a deduction under ATC simply depends upon when you took the policy. That's all. That discussion is over. Now you are getting proceeds from life insurance policy. It is any other policy. It is not upon death. Point number 1, it is any other policy. Point number 2, it is not upon death. It is not upon death. Okay. Then what will you check? In that case, the first thing you will check is the premium within 10, 15, 20. You will check is a premium within 10, 15, 20. Whatever is the date which is applicable is a premium within 10, 15, 20. If the premium is within 10, 15, 20, then only then you will go to the next step. Because tell me, if the premium is more than 10, 15, 20, what will you straight away say? You will straight away say the policy is taxable. 5 lakh doesn't even matter to you. If the premium is within 10, 15, 20, then you will check the date of policy. Is the date of policy, don't put this down, okay? Because I'm going to redo this for you in a better manner. I'm just giving you one small brief here. Then I will redo it for you in a bigger chart. Okay. So the first thing you will see, it should be some other policy. It should not be KMIP. It should not be ULIP. It should not be term life insurance policy. Second thing you will check, the proceeds should not be upon death. Because if the proceeds are upon death, there itself you get an exemption. Then you will check is a premium within 10, 15, 20 number. If it is within the 10, 15, 20 number, then only then you will think further. Because if the premium is more than 10, 15, 20 number, there itself you will say that it is fully taxable. So if the premium should be within 10, 15, 20 number, then you will see the date of the policy. If the date of the policy is on or before 1st April, if the date of the policy is before 1st April 2023, then when you look at will you look at the 5 lakh number? You will not look at the 5 lakh number. But if the policy date is on or after 1st April 2023, only then you will look at the 5 lakh number. So, to give you a flow chart, the first thing you will see, first of all, you will ensure it is not KMIP. Listen to me, I'll give you time to write. It should not be ULIP. It should not be term life insurance policy. It should be any other policy. This is your first checkpoint. Okay, if this checkpoint is fulfilled, then only you will proceed forward. If this checkpoint is fulfilled, then after that you will check when did you receive the proceeds. Did you receive the proceeds upon death? Or did you receive the proceeds other than that, which means not related to death? If you received the proceeds relating to death, will you check anything else? No. You will straight away say it is exempt. Exempt under which section? 1010D. Under 1010D, you will say exempt. If it is not related to death, then you will see, is the premium more than 10, 15, 20? If the premium is more than 10, 15, 20, don't you think I can straight away say that the proceeds are going to be taxable? If the premium is more than 10, 15, 20, will I even check the 5 lakh number? No. If the premium is more than 10, 15, 20, straight away proceeds are taxable. Because if you remember, here I told you, I will even enter the story only if my premium is first of all within 10, 15, 20. So if my premium is more than 10, 15, 20, I'll straight away say that the proceeds are taxable. Nothing else to check. But however, if the premium happens to be within 10, 15, 20, then I will check what is the date of the policy. Is the date of policy before 1st April 2023 or is the date of policy on or after 1st April 2023? Tell me, if the date of policy is before 1st April 2023, will the 5 lakh number even apply to you? No, right? So it is any other policy. You received money not connected to death. Premium is within 10, 15, 20. 5 lakh number is not applicable to you. So tell me, will the proceeds be exempt or taxable? You answer. This category, will the proceeds be exempt or taxable? You answer. It is any other policy. It is not related to death. Premium is within 10, 15, 20. You took the policy before 1st April 2023. So 5 lakh number is also not applicable. Come on, answer guys. What would you say? The proceeds exempt or taxable? You will say that the proceeds are exempt. Exempt under which section? Exempt under section 1010D. Amazing answers guys. Very good. Perfect answers. 1010D. But however, what if the date of policy is on or after 1st April 2023? Then what will you check? Then you will check the 5 lakhs number. Guys. So in this case, if the premium, can I say, let me make it simpler. If the premium is within 5 lakhs, then tell me, then the proceeds, what will you say? Then the proceeds will be again exempt under section 1010D. But if the premium happens to be more than 5 lakhs, then you will say that the proceeds will be taxable. But what is taxable? I don't know as of now. How to compute taxable? I don't know. Computation we will see later, but the proceeds will be taxable. Feeling a little better? This is like a summary of my entire discussion, and this summary will make all your examples super easy. You will see upon death or not related to death. If it is upon death, you will straight away conclude exempt. Nothing more to check. If it is not related to death, then you will see, is a premium more than 10, 15, 20 or is it within 10, 15, 20? See, why have I written 3 numbers? Because depending upon the policy, the number will change, right? If the policy is taken after 1st April 2003 but before 1st April 2012, then I will check the 20% number. If the policy is taken on or after 1st April 2012, then I will check the 10% number. If the policy is taken on or after 1st April 2013 on the life of a person who is disabled or suffering from a disease, then I'll take the 15% number. So it will keep changing. So you will see when was the policy taken, what number will apply to you, accordingly you'll see. So if the premium is more than 10, 15, 20, whatever is applicable, then you will straight away say that the proceeds are taxable. You won't even look at the 5 lakh number. But however, if the premium was within 10, 15, 20, and if the policy is taken on or after 1st April 2023, then you will check the premium number. If the premium is within 5 lakhs, only then it will be exempt. If the premium is more than 5 lakhs, then the proceeds will be taxable. Alright, I'll give you a minute. Can you quickly nicely spread this across and write it down, please? I'll wait for you guys. Nicely space it out. Okay, every example you're going to look at this flowchart only and you're going to give me the answer. See, just an extra observation, okay? If the policy is on or after 1st April 2023, will the 20% number even be applicable? No. Because don't you think the 20% number will apply only for policies up to 1st April 2012? But we are talking about policies taken on or after 1st April 2023. So you can sort of say that the 20% number will not apply. It will either be 10 or it will be 15. But don't let this confuse you. You still keep it as 10, 15, 20 only. Because as soon as you start doing the checking on the basis of this table, you will automatically end up eliminating this. Because otherwise, you'll have to remember one extra point. So we are trying to keep the burden a little lesser on us. So therefore, yes, no doubt, in this category, the premium will either be 10 or 15. It can't be 20 because 20 is only till 2012. But I'm asking you not to, take it as an extra point, because if you do that, you'll have to remember one extra point. But it will anyway still get covered. As you check the dates, it will anyway still get covered. You'll understand when I show you the examples. Don't worry. Just put this down for now. Are we done? Can we begin the examples? Okay, there are totally 10 examples, all right. I've put them all in the classroom notes. It'll be easy for us to discuss. Listen, we will follow the same chart in every example so that we train our mind to think in a certain sequence. All right, you ready? Look at the first example. Look at the very first example. We have only one life insurance policy A. It was taken on 1st April 2013. Annual premium is 6 lakhs. Sum assured is 60 lakhs. Consideration received on 1st November 2023 70 lakhs. Assessee did not receive any consideration under any eligible LIPs. Forget about this, I'll explain this to you later. You answer my question. What's the first checkpoint? Tell me. Same sequence we will think. What's the first checkpoint? Tell me. Is it ULIP? Is it term life insurance policy? Is it KMIP? No. Then what do we check? Think about it. Is it upon death? Did we receive the money upon death? Is it related to death? No, it is not related to death. If it is not related to death, then what do we check? Try to keep the flowchart in front of you. Keep the flowchart open in front of you. Okay. So first of all, it is any other policy. It is not related to death. So I'll enter into this part of the flowchart. Now I'll check, is the premium more than 10, 15, 20 or is it within 10, 15, 20? That depends upon the policy date. When was the policy taken? 1st April 2013. Does the question talk about disabled, disabled or disease and all? No. So tell me, was the policy taken or before 1st April 2012? No. When was the policy taken? Policy was taken on or after 1st April 2012. So therefore, what is going to be your percentage, applicable percentage? The applicable percentage would be 10%. Policy is taken on or after 1st April 2012. So your premium has to be within 10% of sum assured. Your sum assured is 60 lakhs. Your premium is 6 lakhs. Is your premium within 10% of sum assured? Yes, your premium is within 10% of sum assured. So premium is within 10% of sum assured. I'll fall under this bucket now. Now tell me, was the policy before 1st April 2023 or after 1st April 2023? Policy is in 2013. It is before 1st April 2023. So will you think about the 5 lakh number? You will not think about the 5 lakh number. You got it. See, I'll tell you again. Is it ULIP term life insurance policy or KMIP? No. Did you receive it upon death? You did not receive it upon death. Then tell me, if you did not receive it upon death, then we check 10, 15, 20. For 10, 15, 20, what's the first thing I need to know? Where did it go? 1 second. For 10, 15, 20, what's the first thing I need to know for 10, 15, 20? I need to know the date of the policy, right? What is the date of the policy? Tell me. The date of the policy is 1st April 2013. Yes, guys, date of the policy is 1st April 2013. See, first 1 or 2 examples, if you understand, after that it will become like one game only. Alright, so just pay little extra attention initially. Just the flowchart we are following blindly, guys. It's not ULIP, it's not term life insurance policy, it is not KMIP. It's any other policy. Was the money upon death? No. The money was received not upon death. If it is not upon death, I'll check 10, 15, 20. 10, 15, 20 depends upon the date of the policy. The date of the policy is 1st April 2013. Tell me, is it before 1st April 2003? No. Tell me, is it on or after 1st April 2003 but before 1st April 2012? No. Is it on or after 1st April 2012? Yes. Is the insured disabled or diseased? No. Therefore, the policy is on or after 1st April 2012. So what's going to be your limit? Your premium has to be within how much? The premium has to be within 10% of sum assured. This is going to be your conclusion. This is going to be your limit. Now, how much premium are we paying in this question? How much premium are we paying? We're paying 6 lakhs. What is the sum assured? 60 lakhs. So 60 lakhs into 10% is how much? 6 lakhs. And how much premium are we paying? The premium that we are paying is also 6 lakhs. So our premium is within the limit. So which means we are fulfilling this condition. So the premium is within the limit. Now, if the premium is within 10, 15, 20, so I've concluded that yes, the premium is within 10, 15, 20. Now, after that, what will I check? If premium is within 10, 15, 20, then I will check is the date of the policy on or after what? I'll check is the date of policy on or after which date? Is it on or after 1st April 2023? Is it on or after 1st April 2023? No, it is not on or after 1st April 2023. So will the 5 lakh number apply? The 5 lakh number will not apply. So what is my conclusion now? What is my conclusion? It is within 10, 15, 20. Policy is within 1st April 2023. So the proceeds are going to be fully exempt. The proceeds are going to be fully exempt. You understood the sequence? First, I'll check is it ULIP term life insurance policy or KMIP? It is not. Then it should not be related to death. Then I'll see the date of policy. Date of policy is on or after 1st April 2012. So I'll see what my limit is. My limit should be within 10% of sum assured. Yes, it is within 10% of sum assured. Then I'll see was the policy taken on or after 1st April 2023. You're keeping the flowchart open, right? Accordingly, you see, policy is not on or after 1st April 2023. So 5 lakh number will not apply to me. Premium is within 10, 15, 20, therefore exempt. What is exempt? Tell me. What is exempt? The proceeds are exempt. What are the proceeds? Consideration received on maturity. The 70 lakhs, this is the proceeds. The 70 lakh is exempt. Can we see the second example? Second example is what will make you feel a little better. Listen, come to the second example. Listen to me. Again, one policy. What's the first thing you'll check? Read the question first. Life insurance policy A, date of issue 1st April 2023, premium 5 lakh, sum assured 50 lakh, consideration received 52 lakhs. What's the first thing? First point, tell me, is it ULIP? Is it KMIP? Is it term life insurance policy? No, it is other policy. Then tell me what's the next thing you'll check. Did you receive the money upon death? No, it is not connected to death. Then after that, you're coming to the main part of the flowchart. In the main, it's not connected to death. So now what will you check? Is the premium within 10, 15, 20? Now to check whether premium is within 10, 15, 20, what do I need to know first? The date of policy. What is the date of policy? 1st April 2023. Tell me, is the date of policy before 1st April 2003? No. Is the date of policy on or after 1st April 2003 but before 1st April 2012? No. Is the policy on or after 1st April 2012? Yes. The policy is on or after 1st April 2012 and no disabled, no disease. So policy is on or after 1st April 2012. So what's your maximum limit now? Your premium has to be within 10% of sum assured. This is going to be your rule. What is the sum assured here? Sum assured is 50 lakhs. So what is 50 lakh into 10%? 5 lakhs. How much premium are you paying? The premium that you are paying is 5 lakhs. So can I say that the premium is within 10% of sum assured? Yes, guys. So the premium is within 10% of sum assured. So if the premium is within 10% of sum assured, then what's the next thing you'll check? Is it before 1st April 2023 or is it after 1st April, on or after 1st April 2023? How is it over here? The policy was taken on 1st April 2023. It is on or after 1st April 2023. Just answer my question. What if it was 1st April 2022? Then what would you do? Tell me first. Then we'll go to 2023. If it was 1st April 2022, you would say it is before 1st April 2023. So is a 5 lakh number relevant for you? 5 lakh number is not relevant for you. So it is within 10% of sum assured. 5 lakh number is not relevant for you. You would say it is straight away exempt. Does everybody agree? Yes. But here if you see the policy is taken on 1st April 2023. So yes, the policy is taken on or after 1st April 2023. So is the 5 lakh number relevant for you? Yes, the 5 lakh number is relevant for you. Is the premium within 5 lakhs? Yes, the premium is within 5 lakh. So therefore, what will be your answer? Your answer will be exempt under 1010D. What is going to be exempt under 1010D? The proceeds. The proceeds of 52 lakhs. All right. Feeling a little better? The chart will make things much easier. See, if the proceeds are exempt, the proceeds are fully exempt. Full 52 lakh will be exempt. Okay. If the proceeds are exempt, full proceeds will be exempt. If it is taxable, how to compute taxable? I haven't discussed that with you yet. If exempt, full 52 lakh is exempt. Okay. Now, example 3, will you try on your own, please? You just have to say whether exempt or taxable, that's all. Come on, focus on this question first. Please follow the steps. No matter how confident you are, please follow the steps. You just have to tell me exempt or taxable, that's all. Follow all the steps. Amazing, guys. Amazing. Not one wrong answer. All perfect answers. This is really, really nice. I'm telling you, after this entire discussion, I'm telling you that this amendment is the most difficult of all the amendments that have been brought in by Finance Act 2023. And if you're able to handle this, it's a really, really good thing. All right. Look at this now. Just follow the flowchart. The flowchart will make it simple for you. Tell me what's the first thing I will check. The first thing I'll check what is the policy ULIP or term life insurance policy or KMIP? No, it is any other policy. If it is any other policy, then what's the next thing we will see? Did you receive the money upon death? Just keep the flowchart open. Did you receive the money upon death? No, it is not connected to death. Then after that, you have to see the 10, 15, 20 number. 10, 15, 20 number depends upon what? It depends upon the date of policy. What is the date of policy, guys? When was the policy taken? See, the question says date of policy is 1st April 2023. Okay, so tell me, is the policy before 1st April 2003? No. Is it on or after 1st April 2003 but before 1st April 2012? No. Is it on or after 1st April 2012? Yes, it is on or after 1st April 2012 and no disease, no disability and all. So therefore, on or after 1st April 2012. So your premium has to be within how much? Your premium has to be within 10% of sum assured. Did you arrive at this conclusion when you were doing your thinking? Yes, so premium has to be within 10% of sum assured. Now, what is the sum assured over here? The sum assured over here is 60 lakhs. So 60 lakhs into 10% is how much? 6 lakhs. And how much premium are we paying? We are paying a premium of 6 lakhs only. So tell me, is my policy is my premium within 10% of sum assured? Yes, my premium is within 10% of sum assured. Now, after this, what do you check? Premium is within 10% of sum assured. So, we are now in the right-hand side of the flow chart. Premium is within 10% of sum assured. Now, you will see the date of the policy. You will see the 1st April 2023 date. Now, tell me, is the policy taken within 1st April 2023 or is it taken after 1st April 2023? The question says a policy is taken on 1st April 2023. So, policy is taken on or after 1st April 2023. But for a moment, what if the policy is taken on 1st April 2022? Then what would you say? For a moment, if the policy was taken on 1st April 2022, you would say policy is taken before 1st April 2023. So therefore, you would say that 5 lakh number irrelevant and premium is within 10% of sum assured. You would have said exempt, 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 right? But here if you see, what about the date? Here the date is actually 1st April 2023. So the policy is taken on or after 1st April 2023. If the policy is on or after 1st April 2023, will the 5 lakh number be relevant for me? Yes. Tell me, is the premium more than 5 lakhs? Yes, premium is more than 5 lakhs. So because premium is more than 5 lakh, will you enjoy the exemption under 1010D? Sorry, boss, no exemption. Therefore, taxable. Getting a hang of it? Yes. You ensure that the flowchart is imprinted in your memory. You will just not make a mistake. I'm giving you a guarantee. All right. Can we go to the fourth example? Yes, I think this is the longest you've ever sit with me without a break. But I'm hoping that you're still paying attention. I'm hoping you're still able to listen and you're still able to absorb. Come to the fourth example. Come to the fourth example. See if you're able to handle this. Okay. Multiple policies. First time multiple policies, guys, we're doing. First time multiple policies. We have 2 policies. It's going to be a little challenging, but we have the flow chart with us, so we will be able to handle. All right. Listen to me. We have 2 policies, A and B. Date of issue, annual premium, sum assured, consideration received. Okay. First thing, what will I check? No matter how good I am at the concept, I will always follow my flowchart to the T. Tell me, the first thing, what's the first thing I will check? First thing. Is my policy ULIP? Is it KMIP? Is it term life insurance policy? No. It is other policy. Huh? Then tell me, did we receive this money upon death? No, it is not connected to death. Then what will I'll come to the main part of my flowchart. Main part of the flowchart, it depends upon 10, 15, 20. 10, 15, 20, I first need to see the date of policy. See each policy you see one by one. Policy A. Policy A 1st April 2023. Policy B 1st April 2023. Same date only. Tell me, was a policy taken before 1st April 2003? No. Was a policy taken on or after 1st April 2003 but before 1st April 2012? No. Was a policy taken on or after 1st April 2012? Yes. No disability, no disease, so no 2013. Policies taken on or after 1st April 2012, the premium should be how much? The premium should be within 10% of sum assured. The premium should be. This is going to be your rule. Okay. Now, how much premium are you paying? See for each policy one by one. See for policy A. What is the sum assured? The sum assured is 30 lakhs. So 30 lakh into 10%, how much maximum you can pay? Maximum you can pay 3 lakhs. But how much premium is your assessee paying? Assessee is paying 3 lakh only, which means it is within 10% of sum assured. I can say that the premium is within 10% of sum assured here. Yes. And what about policy B? Policy B, what is the sum assured? 20 lakhs. How much you can pay maximum? 20 lakh into 10%, maximum you can pay 2 lakhs. How much is assessee paying? Assessee is paying premium of 2 lakh only. So here also I can say that the premium is within 10% of sum assured. So both the policies, if you see, the premium is within 10% of sum assured. Now, if the premium is within 10% of sum assured, what will you do next? Next, you will check date of policy. Date of policy is on or after 1st April 2023. So will you bother about the 5 lakh number? Yes. For a moment, what if the policy was before 1st April 2023? What if the policy is before 1st April 2023? Then it is straight away exempt. No, if it is before 1st April 2023, we've already concluded premium is within 10, 15, 20. 5 lakhs number would not be relevant for me. I would say it is straight away exempt. But here, if you see, policy is exactly on 1st April 2023. Now, because 1st April 2023, 5 lakh number will be relevant for me. But here I have multiple policies. You see the aggregate. Tell me, is the aggregate within 5 lakhs? Yes, the aggregate premium, if you see, it is within 5 lakhs. I know you would be having a lot of doubts right now. What if one policy more than 10%, one policy within 10%? What if, what if aggregate premium is more than 5 lakh? You'll have n number of scenarios in your mind. Patience, we have 10 examples, everything will get covered. So if the aggregate premium is within 5 lakh, therefore what will you say? You will say it's going to be exempt under section 1010D. All right. If you have multiple policies, you will look at the aggregate premium. Aggregate premium is within 5 lakhs, therefore exempt. Did you notice one little thing? Did you notice for everything else, I'm looking at each policy separately. 10, 15, 20, I'm looking at each policy separately. Only for 5 lakh limit, I will look at the aggregate. Okay, only for the 5 lakh limit only, I will look at the aggregate. All right, now come to example 5. Shall we see this? Listen now, example 5. We have again two policies, A and B. Date of issue they've given, annual premium, sum assured, consideration, all this they've given to me. What's going to be my first point? Tell me, is it ULIP? Is it KMIP? Is it term life insurance policy? No, it is other. Is it connected to death? No. Then 10, 15, 20, I'll check. For 10, 15, 20, I need the date of policy. Date of policy and all, each policy I'll check separately. Policy A 1st April 2023, policy B 1st April 2023, same date only. Tell me, was the policy taken before 1st April 2003? No. Was it after 1st April 2003 but before 1st April 2012? No. Was it on or after 1st April 2012? Yes. And also no question of disability, disease and all. So therefore, what will your maximum limit be? Maximum premium that you can pay is, it should be within 10% of sum assured. It should be within 10% of sum assured. All right. See, our discussion is not focused on ATC premium. Our discussion is focused on proceeds. So you focus on that, because ATC premium is usual standard discussion, more of a chapter 6A discussion. I just discussed it with you here because it was connected. But focus on the proceeds part first. Now tell me, policy A. Let's discuss each policy one by one. Policy A, what's the maximum premium you can pay? The sum assured is 45 lakhs. 45 lakh into 10%. Maximum you can pay 4,50,000. Policy B, how much you can pay maximum? 55 lakh into 10%. Maximum 5,50,000 you can pay. Okay, but how much is the premium that you have paid? For policy A, you've paid 4,50,000. For policy B, you've paid premium of 5,50,000. So if you see for both the policies, if you see the premium that you have paid is within 10% of sum assured. Okay, so had the policy been 1st April 2022, you wouldn't even check the 5 lakh number. You would have straight away said it is exempt, you would have said. But here the policy is taken on 1st April 2023. So policy is taken on or after 1st April 2023. There are multiple policies. This is where the real game is. What will I look at? Aggregate. What is the aggregate? The aggregate is 10 lakhs. The aggregate is clearly more than 5 lakhs. If the aggregate is more than 5 lakhs, what did we learn? If the aggregate is more than 5 lakhs, we said we will take that permutation or combination which is within 5 lakhs and maximizes the exemption. Now tell me, can I even think of giving exemption to policy B? No, this is more than 5 lakhs, guys. So if the aggregate is more than 5 lakhs, I'll take that combination which is within 5 lakhs. So only policy A. So here I'll say that policy A is within 5 lakhs. Policy A, I will enjoy the exemption under section 1010D. However, policy B, I'll say that it is more than 5 lakhs. So here, will I get the exemption under 1010D? Here, sorry, I will not get the 1010D exemption. You are getting it? You're getting better at it? Yes. So the aggregate is more than 5 lakhs, guys. So as the aggregate is more than 5 lakh, you will look at each, you will see which combination is within 5 lakhs. Policy A is within 5 lakhs. So if policy A is within 5 lakhs, this policy I'll say exempt. The maturity proceeds will be exempt. But policy B more than 5 lakhs, here the maturity proceeds will not be exempt. 5 examples we are done. We have another 5 examples. The other 5 examples we will not take up right now. The other 5 examples we will take up in the next session. We will give ourselves some chance, we will give ourselves some time to, forget, and then we will check our ability that are we able to recall or not. The remaining 5 examples we'll have to do some discussions. So therefore, the remaining 5 examples we will take up in the next session. And also, We still have a few more small points left, like we have to talk about GST on life insurance premium. Then we have to talk about term life insurance a little more in detail. Then we also have to learn how to calculate the taxable number. That I've not even told you. I've only told you how to calculate the exempt number, but how to calculate the taxable number, if taxable, how much will be taxable, all that I have not discussed with you till now. So all of that along with the remaining 5 examples we will take up in the next class. All right, guys. So till here, you should be confident, really confident. You ensure you've revised till here before the next session, and then next session, another half an hour probably, we should be done with this discussion. All right. So I'll see you in the next session. I'll close over here. Thank you, guys.